Good morning and welcome. I'm Harsh Saita. With me is Snehi Shah. Over the next 1 hour, we'll take you through all that's happening in global markets as well as what to look out for in Indian markets. You're watching Market Cafe on ET Now. Snehi, good morning. Global markets, what are they up to? What are the initial cues that we're seeing?
Well, Harsh, good morning to you and a very good morning to all our viewers as well. Let me take you through what the global markets did in trade yesterday, and let's start with the US markets then. And stock futures were near the flat line Thursday night as investors came off a mixed trading session and closed out a month that saw losses for all three stock indices. Now, on the earnings front, database software maker MongoDB and Dell Technologies advanced 4% and 7% respectively in extended trading on the back of stronger than expected earnings reports. Shares of athletic apparel retailer Lululemon Athletica added 1% after crushing Wall Street estimates. Now, the moves follow a tumultuous month for stocks despite a recent string of positive sessions that helped stock indices trim their monthly losses. The S&P 500, however, still lost 1.7%, while Nasdaq shared 2.1% and the Dow dropped 2.3% overall for the month of August. Now, traders on Thursday sifted through new US inflation data that showed cooling price increases. Core personal consumption expenditures, which are closely watched by the Fed Reserve for an indicator of inflation, increased 0.2% month over month in July and 4.2% on a YOY basis, matching estimates from economists polled by Dow Jones. Now, investors will now await the non-farm payroll data due Friday morning. An economist poll by Dow Jones forecast 170,000 additions. Traders are also holding on to hope that the report will indicate that the economy is slowing meaningfully and ultimately give the central bank reason to pause benchmark interest rate hikes. Shifting focus to Europe then, European stock markets closed slightly lower Thursday after the release of preliminary Eurozone inflation data, and as UBS posted its first set of results since the bank completed its takeover of Credit Suisse. Now, the pan-European stock 600 slipped to just a 0.1% of a loss at the end of a largely positive trading session, now taking declines for the month overall to 2.6%. So, largely mixed handover coming in from both US as well as European markets, and on a monthly basis, well, we are seeing a negative handover coming in from US as well as Europe. But Harsh, this was on the global markets front, the equity front. Why don't you take us through what crude and other commodities did?
Well, yes, to start off, crude in fact was elevated. In fact, it rose a little bit on the back of $2 a barrel is the rise in crude that we saw late yesterday. And largely it's with regard to expectations of a production cut by OPEC Plus, and that is expected to continue through to the end of 2023. Not surprising. Largely on the back of the fact that you are expected to continue to see rate hikes, 20% probability of a rate hike in September itself in the US, and that will definitely mean that demand compression will come through. Also on Thursday, or 6-month US crude oil futures traded as low as $3.83 below crude for the front month delivery, the steepest discount since the 17th of November, and signaling tight supplies and encouraging inventory draws as well. So Thursday, the US Energy Information Administration, the EIA, said that US oil production with regard to crude oil rose 1.6% in June. Around 12.84 million barrels is what they threw out per day, the highest since February of 2020, before that COVID-19 pandemic destroyed demand for fuel as well as other products. Also adding to the tight supply expectations, the US government data on Wednesday indicated the country's crude inventories fell by a larger than expected 10.5 million barrels last week, largely depleted by higher exports and refinery runs. Analysts expect Saudi Arabia to extend a voluntary oil production cut of 1 million barrels per day into October, and adding to cuts put in place by OPEC Plus. Weak Chinese factory data also has further limited gains. However, Chinese manufacturing activity actually shrank again in August. Factory survey showed on Thursday. This has obviously added and fueled concerns about the weakness in the world's second largest economy. Let's switch over to gold. Gold also dipped Thursday and notched another losing month after, as expected, US inflation and weaker jobs numbers reinforced expectations that the Fed will keep interest rates on hold this year. At least that's broadly the thought process there. Gold settled down around 0.33% at $1,966 per ounce and finished 2.2% lower for the month. of August, third negative month in for gold.
Well, absolutely, Harsh. Gold is not holding up very well. But with that, let's also look at all the important cues that you need to be keeping on your radar this Friday morning. And on the corporate action front, then you've got the August auto sales data that will come. Remember, this is the first of the month. So every month we have the auto sales data come in. So likewise, today we will have the auto sales data come in for companies across the auto space. For Yatharth Hospitals today, the lock-in ends for 4% of equity. Remember, this IPO debuted on the bosses on the 7th of August. So the lock-in period will be ending today. For Ethos, the board will consider fundraising via QIP. So Ethos will be in focus as well. On the other events then, all eyes will be on Royal Enfield because they're about to launch their new bike, the Bullet 350. So let's see how the launch looks like and what this new bike of theirs looks like. And on the other news as well, India's Navy warship Mahendragiri will be launched in Mumbai today. So keep an eye out for all these cues in today's session.
Right, and let's kickstart today's show with the global macros as always. Let's start with Chinese regulators. They've issued notices to lower payments for both first and second time home buyers. Under regulatory action, they also slashed interest rates on existing mortgages. As per the issued notice, the lowest down payment for first-time home purchasers will be 20%, while it will be 30% for second-time buyers.
And meanwhile, inflation in the Eurozone came in higher than expectations for August, albeit still unchanged when compared to previous month's figure. Headline inflation came in at 5.3% versus the 5.1% estimate. Core inflation, however, fell over the same period by 0.2 of a percentage point, and it is now at the same level as headline inflation at the 5.3% mark.
Right, and US Treasury Secretary Janet Yellen will be participating in the G20 Leaders Summit. This will be Yellen's fourth visit to India in 10 months. What's expected to be on her agenda? Well, efforts on debt structuring and strengthening global economies. That's possibly what she's looking to go or push for.
And shifting focus to earnings, as we discussed earlier, then UBS shares rallied on the back of a blockbuster Q2 result. A net profit of $28.8 billion on the back of its acquisition of rival Credit Suisse. Meanwhile, tech giant Dell reported better than expected Q2 results, largely led by a surge in their services and software maintenance agreements. Top line for the company picked up a whopping $22.9 billion.
Well, and switching over, Canadian e-commerce giant Shopify inks a deal with Amazon to offer its Buy with Prime program to merchants. The Buy with Prime feature allows online consumers the option to purchase their items using the store payment method in their Amazon wallet. Shares of Shopify were up nearly 10% on the back of this news.
And the Hong Kong stock market will remain closed today after the government hoisted storm warning signal as Super Typhoon Saola approaches the city, bringing heavy rains and gales to the financial hub. The typhoon is expected to be among the 5 strongest typhoons to hit Guangdong since the year 1949.
Right, and signs of economic recovery remain resilient in the first quarter of FY24. GDP for April to June quarter has come in at 7.8%, largely in line with what most analysts were really penciling in. Of course, the RBI had a slightly higher estimate of 8% for Q1. It's a 4-quarter high, definitely. Q1 FY23 was around 13.5%. And you're seeing domestic private consumption as well as services, which were really the biggest growth drivers in the quarter. Meanwhile, agri saw a bit of a slump, growing at just 3.5% in Q1 compared to 5.5% in Q4 of FY23, which is just the last quarter. And meanwhile, manufacturing remains steady, expanding 4.7% versus 4.5% in the previous quarter. With regard to what continues to be largely in focus, you have 2 patchy pockets. One pocket where you have rural as well as MSME, which currently is still patchy with regard to growth. And what you're also seeing in terms of some level of patchiness is with regard to private capex. So both those on the horizon, but hopefully that should progress better in or through FY24.
Well, fiscal Deficit has also widened to 6.06 lakh crore in April to July period from that 4.51 lakh crore mark in April to June. Now, the fiscal deficit data at the end of July stands at 33.9% of the annual estimates. The centre's fiscal deficit target for 2023-24 is 5.9% of the GDP, down from 6.4% of the GDP in 2022-23. And talking about the latest macro data points, Chief Economic Advisor V. Nageshwaran said investment intentions coming back in a big way and there is some stability on the GST collection front as well. He also spoke about inflation both from domestic as well as global perspective. Listen in to what he had to say.
We are now the risks are evenly balanced around our central expectation of 6.5%. We maintain that view. We are not saying that downside risks dominate the upside to this estimate of 6.5%. The economy, and one of the main reasons for that is that rural demand is recovering and private sector capital formation is recovering. And as you saw, services sector exports are compensating very well for the slowdown in merchandise export growth. Bank credit to MSMEs and agriculture are growing as well, and so are other indicators of employment and demand generation. So overall, this is a good number, and the fact that nominal GDP growth was 8% and real GDP was 7.8%, signaling that there is momentum in the economic activity in general, and it is not driven by price-related distortions. Therefore, as I said, our projections still are very comfortably placed at 6.5% for the current financial year.
Okay, so one of the component of the fiscal deficit for the government is interest payments, and because of the so-called hawkish nature of RBI, which is the rate increases that we saw, the quick rate increases that we saw last year, has really altered the fiscal arithmetic for the government. But thankfully, the good news ahead is that we will see the interest-related outgo from the government's expenditure kitty gradually coming off, and we might potentially see also interest rates falling off ahead. I'm not saying it will happen in the next quarter, but we will see one rate decrease from RBI coming in at least this fiscal year.
Well, with supply shortages everywhere, I think India can benefit from that greatly. Oil prices have been in a really elevated level, supported definitely by OPEC plus voluntary cuts. And we do expect another cut extension in October. And that's kind of supporting prices right now. That's actually the main thing supporting prices right now. Of course, other than the fact that we have Hurricane Idalia that's also affecting supply or mounting fears on supply shortages. So I think that would be a positive thing for India in terms of prices going higher and benefiting the Indian economy.
And from one critical piece of the macro to the other, you have the country which saw dry summer in over 100 years. Some relief expected on the monsoon front. The IMD said September is likely to witness normal rainfall in the range of 91 to 109% of the long period average of 168 millimeters. Listen in to the views.
There will be reversal. There will be a change in the trend of rainfall activity as compared to August. While August was highly deficient, in the month of September, we can expect the normal rainfall activity. During the month of August, and most of the days, rainfall was less than the normal. Only in the beginning of 1st to 3rd August, and in between, around, say, 23rd to 25th August, there was normal rainfall activity. Otherwise, most of the days we have the deficient rainfall activity. And at present also, if you just look at it, is the deficient rainfall activity for the country as a whole. Now, if I consider the diagram below, that is the rainfall deviation from the normal, it is called a standardized rainfall anomaly over the monsoon core region. That is almost central India, you can say. You can also find that in the month of August, these are all the red bars downward. These are all the days when rainfall was significantly deficient. So what I want to say that in the month of August, there has been weak monsoon conditions on many days. And there has been a typical break monsoon period, starting with, you can say, from 6th of August and extended up to 16th of August. That is the first spell. Then there was another 2 days that you cannot say that it's a spell. But afterwards, again, it started around 26th of August, and that spell is continuing when rainfall is significantly lower than the expected.
All right, that's the word coming in from IMD for the monsoon expectation for the month of September. But with that, let's quickly slip into a very short break. You don't go anywhere. On the other side, we'll see how the Asian markets have opened up this morning.
Welcome back. You're watching Market Cafe on ET Now. I'm going to quickly take you through what Asian markets are up to. Right on top of that is the Chinese factory activity, which contracted for the 5th straight month in August. You also saw the manufacturing PMI come in lower. In fact, Purchaser Manager Index came in at 49.7, representing a softer rate of contraction compared to the 49.4%, which was expected. So in any case, you're seeing some amount of contraction, but despite that, you're seeing positive on the Chinese index, which is the Shanghai, up around 0.5%. You're seeing some bit of softness with regard to the ASX 200, the Australian index, lagging slightly lower in early trade today, down around 0.4%. You're seeing the Nikkei and the Kospi, both of which are higher in trade today. The Nikkei is up around 0.5%, and the Kospi too trading slightly in the green, marginally by a feather or so, just down as we speak. So you're largely seeing green despite a slight bit of tepidness when it comes to the handover from global markets. But on the GIFT Nifty itself, you're down around 0.1%, so it's indicating a slightly lower start. 19,400 odd is what the initial indication is, a 0.1% lower. Snehi.
Absolutely, Harsh. Thanks for taking us through what the Asian markets are doing this morning.
Right, welcome back. As the month of August ends, we'll also have the auto sales numbers along with all of the other metrics that we look at every month. So auto sales are expected to see a boost from the upcoming festive season. Most of the segments are expected to witness healthy growth. We have Srishti here to tell us more about what we can expect from those numbers.
Well, yes, for the month of August, we are seeing a healthy demand pick up across all the segments. Majorly, we are expecting a number to be green when we compare the numbers on a month-on-month basis. But it seems like that the auto sector is getting prepped up for the festive season as inventory is seen to be inching up. Let's talk about the segmental performance expected from the two-wheeler segment. We are expecting the domestic demand to sustain, giving the push. From the passenger vehicle segment, though, the inventory level is seen to be inching up, but the dealers are highlighting that the demand is once again gaining momentum, as well as some of the new launches from the likes of Tata Motors in their CNG model is seeing traction. From the commercial vehicle segment, though this time the fleet utilization remained weak due to the seasonal impact, but the demand is shaping up in the positive side here as well, and the tractor demand is also expected to be robust. Talking about the company specific numbers from the passenger vehicle space, we are expecting a jump of 1 to 2% from the likes of Mahindra and Mahindra Automotive Division, Tata Motors, as well as Maruti Suzuki. But in the commercial vehicle space, do watch out for Ashok Leyland numbers, because on a month-on-month basis, we are expecting a jump of 4% over there. Over 15,500 units is what the company is expected to report. And for Eicher Motors VECV as well as Tata Motors commercial vehicle segment, we are expecting a flattish sort of a growth. In the two-wheeler segment, though the domestic demand is seen to be supportive, the exports demand and the sales is expected to be flat from the likes of Bajaj Auto as well as TVS Motors. But do look out for Bajaj Auto, because herein we are expecting a jump of 10% on a sequential basis. Hero MotoCorp, a sales uptick of 7% is expected, though on a back of a low base, because last month's numbers were a bit disappointing. And TVS Motors, Eicher Motors, Royal Enfield expected to show a jump of 3 to 6%. And lastly, from the tractor division, M&M Tractor expected to report 22,000 over units, and Escorts expecting a jump of 8%. Over 6,000 of units in the sales data is expected for the month of August. So these are the auto sales expectations for August.
All right, Rishi, thanks a lot for taking us through that. But let's keep it with autos then, because Siddharth Dalal, the managing director of Eicher Motors, says that the company is not in any hurry to launch electric motorcycles. Listen in to what he had to say.
Quickly cobbling something together and saying, bloody hell, everyone's in the market, we must be in the market. Everyone's in the market, EV motorcycles, but no one's selling motorcycles, right? No one's selling an EV motorcycle. So just to come out with a motorcycle is not, that's not our objective. But to come out with something which is really special, which from an understanding approach where we've really understood why EV? I mean, why should anyone buy an EV? There's no reason for a motorcyclist to buy an EV today because, they get such a good product out of a internal combustion engine, right? So that's the why we ask ourselves. And if it's not enough, we're not going to come out with a product, right? Only if we really take advantage of that EV and we put something out there that's path breaking, that's differentiated, that's really unique and that people lust after and say, bloody hell, this is amazing and we really want it. Only then we'll come out with the product. There's no need to come out with something just to tell people, oh, we've got an EV, but we're not able to sell it.
Right, that was Siddhartha Lal. Strong words coming on that front. Let's quickly move on to an ET Now exclusive now. We learned that Torrent Pharma promoters will be paring stake in the company to fund the buyout promoters or to buy out the promoter's stake in Cipla. My colleague Cheryl D'Souza joins in with more details on that one. Cheryl.
We've learned exclusively from our sources is the fact that yes, Torrent Pharma is looking to bid for the Hamid family stake in Cipla. Along with that, what we're additionally hearing this time around from our sources is that the promoters of Torrent Pharma are likely to look at stake dilution as one of the options. And what we are picking up from those sources is the fact that they may look to dilute approximately 20% stake in the company. Currently, the promoters hold around 71.25% stake in the company. So they may look at some offloading of that stake in order to fund the stake buy, that is the Cipla, Hamid family stake in Cipla. Alongside with that, what we are also picking up from the sources is the fact that Torrent Pharma promoters have already lined up debt from foreign lenders, and if they are going to look at going ahead and bidding for the Cipla stake, they will be looking at bidding via a consortium of Ps as well. Remember the fact that Hamid family stake buy is supposed to be an all-cash deal. Therefore, the company or the promoters are looking at various options or other combination of options in order to finance this particular stake buy. Some of the key notes is the fact that Cipla and Torrent Pharma both are cash generating businesses. Also the fact being that as per analysts, what they are saying is the Cipla stake buy may trigger an open offer. This if Torrent Pharma is looking to bid for the entire stake, which is approximately 34% stake. So if they're going to go ahead and bid for the entire stake in entirety, then that would trigger an open offer, which would mean that they would need approximately $6.5 to $7 billion for this particular stake buy. Also, the combined entity will also be the second largest Indian pharma company by market capitalization in this, yes, if the deal goes through. And also the combined entity would have revenue of approximately 32,000 crore rupees and EBITDA of approximately 8,000 crore rupees. We did try to reach out with the management of Torrent Pharma. They have not responded to ET Now queries. But yes, for now, what we are picking up from the sources is that the promoters may likely look at partial stake sale, also raise debt from foreign lenders, and also look to bid for the stake with a consortium of Ps.
All right, Cheryl, thanks a lot for taking us through that exclusive news on Cipla as well as Torrent Pharma. I'm sure both those stocks will be in focus today. But let's get a move on then. And SEBI's consultation paper suggests that there should be a performance validation agency to look into claims by mutual funds about their performance and investment related advice. My colleague Ankur is joining in with all the details on this. Ankur, take it away.
Yes, market regulator SEBI has suggested performance validation agency. Now, this agency is required because many times the investors were not getting the actual information whether or not the claims which has been made by investment advisors or mutual fund houses are correct or not. There were various times where buy, sell, hold recommendations were made, but who is going to verify that what is the past performance if somebody is claiming it? And not only that, you would remember that SEBI had barred SEBI had barred that the many of the agencies who were using algo tradings cannot use any backstage data which they are claiming. And now, if the agency will be there, those algo claims might be possible because there will be an agency which will be able to verify those claims. So now market regulator has suggested that MIIs may take that initiative and it could be set up, but for that credit rating agencies can also be involved, and that is what the consultation paper which has been floated by SEBI is suggesting. The comments on consultation paper can be sent back by 21st of September, but it will be interesting to see that after taking an action on finfluencers, now market regulator is saying that a performance validation agency is possible.
Right, thanks for that, Ankur. With that, let's slip into a very short break. Of course, more on the other side. We'll start going stock specific, taking you through all the possible movers in trade today.
Hi there, welcome back and thanks for staying tuned to Market Cafe. This is ET Now. Well, before the break, we told you that we will be taking you through a list of all the possible stocks that may be buzzing in trade today, and we're joined in the studios by my colleague Ansh to take you through just that. Good morning, Ansh. Take it away.
Good morning. So, ITD cementation will be the first stock in focus for today's trading session, as company has secured a marine contract worth 3,290 crore. Apart from this, Balaji Amines will also be in focus on the back of the financial updates. The company have had a tough year compared to the previous one. The revenue fell by around 35%, EBITDA dropped by 60%, whereas net profit went down by 62%. Genus Power will also be in focus, as company has got an order worth rupees 2,247 crore to set up smart prepaid meters and other equipment for an advanced metering system. Moving on to HFCL, fundraising committee of the company has approved issuance of 5.1 crore equity share to 5 qualified institutional buyers at the price of 69 rupees per share. This will raise around 352 crore in total. Lastly, MPC will be in focus, as company has paid around 7.5 million Australian dollars to successfully acquire 65% of Liberate Group, whereas Aditya Birla Fashion has successfully acquired 29% of TCNS Clothing's expanded share capital. So keep an eye on the stocks.
Right, thanks for that, Ansh. Let's quickly move on. We have Vamakshi also standing by, talking to us about all the brokerage notes that have come in, or the key ones rather. Vamakshi, talk to us about those.
Well, yes, on that note, let me first start off with the sector that you track closely, Harsh. And there is a report that is coming from Investec, and they've highlighted a pair trade strategy. Now, they've gone long on Union Bank and they've gone short on Bank of Baroda. They do like Union Bank over Bank of Baroda on account of attractive valuations. Now, specifically when they're talking about Union Bank post-fundraise, the CET1 ratio has increased to 13.75%, which is in turn reducing the risk of equity dilution ahead. Apart from that, as far as Bank of Baroda is concerned, they have highlighted that the CD ratio has sequentially increased to 80%, which they believe is the peak level, and thus this could in turn lead to higher pressure as far as the NIMs are concerned. So all in all, Bank of Baroda, they've maintained a hold rating, while for Union Bank of India, they've maintained a buy rating. Apart from that, let's also focus in on the Indian food delivery space. We have a note coming in from CLSA, and they have highlighted that the growth concerns related to these stocks are expected to ease going ahead. The profitability remains firmly established. Tailwinds are in place for the second half of the year, and definitely that could be a big positive for the food delivery business. They're expecting the Cricket World Cup to boost demand. ONDC volumes, that was considered a competitor for these online food delivery platforms, the volumes have actually have declined on account of withdrawal of discounts, and in fact the MTUs are also expected to rise by almost 2.1 times by FY30. So all in all, a lot of positives playing out for Indian food delivery space, and definitely keep an eye out on counters like Zomato. Lastly, let's also focus in on the EMS industry. We have a note coming in from Jefferies. They have highlighted that the Indian EMS industry is expected to reach nearly $59 billion by FY26. A very strong 32% CAGR is what they're expecting. This growth could in turn be led by China Plus One, cheaper labor, as well as electronics under penetration. The government is also boosting indigenization, and components are especially a key focus area. So given all these factors, Jefferies has maintained its hold rating on Dixon Tech. They've maintained a buy rating on Amber Enterprises, and for both of these counters, they've gone ahead and hiked their target price.
All right, Vamakshi, thanks for taking us through all these brokerage news. We will be keeping an eye out on all these stocks in trade today. But let's talk about the month of August and especially the second half of the month that saw a lot of large block deals happening. Now, from the likes of Sula Vineyards, MedPlus Health to something like a Prudent Corp, a lot of block deals happened in the month of August. So my colleague Sharad is here with a roundup of all the deals that happened. Sharad, take it away.
Well, yes, at first we are having Sula Vineyards in focus, and of course do remember that PE firm Verlin Investment Asia, they have sold roughly 13% stake and the valuation is coming more than 500 odd crore rupees. But the absorption, the buyers coming in include Societe Generale, Morgan Stanley and also Indian mutual fund houses. Apart from this, also MedPlus Health Services would be in focus, where Premji Investment and Lavender Investment actually sold stakes of almost 12% stake, almost 1207 crore value, and the absorption was taken by Fidelity Funds, Government of Singapore and also Nippon India Mutual Fund. Also, the third stock would be in focus would be Prudent Corporate Services, and as rightly pointed out, the seller was TAFDI Investors. This is a PE firm. Roughly 9% stake was sold for 420 crore rupees, while the absorption was coming in, and the buyers were marquee names such as Abu Dhabi Investment Authority as well as DSP Mutual Fund. Now, also do remember that the month of August has been very strong when it comes to the selling portion coming and what was reported in the block deals. And we're looking at the numbers from January itself, the numbers were below 10,000 crore mark, but then in the month of March it spiked to more than 30,000 odd crore rupees, and from July till August also we saw more than 80,000 crores of block deals happening.
Right, thanks for that, Sharad. All of the block deals, a lot of action happening in markets at the moment. Let's quickly move on though. With the end of the month, we also saw the numbers for credit growth being disclosed. So you saw ex-HDFC, because now we also have the combined HDFC bank book starting July. But ex-HDFC, for better comparison, banking credit grew around 14.7, 14.8% for the month on a year-on-year basis, around 3.5+% on a year-to-date basis. So definitely it has gone up, but it's decreased month on month 1.4%. So we stand corrected on that graphic, decreased 1.4% month on month. Let's also look at credit cards. In terms of the growth segments, we saw credit cards grow 2% month over month. Vehicle loans also seeing an uptick. PSL housing also seeing an uptick. So those were the segments which are seeing an uptick. Retail overall, the growth has come in at 18.4% year over year. So it's definitely moderated from that higher 20% mark to around 18.5 odd percent. You're also seeing some of the other segments in decline, of course, largely on the back of the higher base in June. Lenders were pushing loans out in Q1, and therefore we saw a slightly more tepid July, but lenders are still very positive going forward into the festive season. They're expecting good credit growth to start to pick up. So July was probably a soft month. In terms of the credit growth, we saw medium industries credit growth slide around 3.5 odd percent on a month-on-month basis. NBFCs also fell around 3.3%, and you saw trading cores having the credit to trades fall to by around 2% or thereabouts, a fall across the board on that one. We also saw in terms of lending spreads, again the medium industries 3.5% has been a downtick. It slipped 3.5% on a month-on-month basis. Let's look at lending spreads again. PSU banks rose around 21 bips. You saw 12 bips decline in June, so the 21 bips was a bit of a recovery. But in terms of the private banks, which grew 21 bips in June of 23 in terms of their lending rates, they further consolidated on that 2 bips increase there as well. So lenders remain overall quite optimistic on credit growth going forward into that festive season.
Alright, we will keep our eyes on how credit growth is panning out, but with that, we spoke to Milind Karmakar and he shares the spaces, he talks about the spaces that he is currently looking to add in his portfolio. He discussed a whole bunch of sectors like railway, defense, IT, consumption. So let's listen in to all the themes that he's currently positive on.
So yes, we have added, like last time also I told you, that we are looking at adding some industrials to the portfolio. So overall industrials in our portfolio have moved to about 15%, and they are into railways, they are into power ancillaries, which benefit out of the second generation power reforms. And of course, the others continue to, there is EMS players as well, Those are the new kids on the block, and I think there the opportunity for growth is also significant. So our basic theme remains same, that wherever there is growth, at least visible for next 5 to 10 years, go and invest in those companies.
Let's pick up railways.
Yeah.
It's a business where it's dependent on government capex.
Absolutely.
It's a business which is completely B2B business.
Yes.
And it's a business where you don't have the best margins.
Right.
Why do you like business? Because the typically places where you've invested in are companies with linear growth and businesses with fat margins.
So when it comes to railways specifically, I 100% agree with you that it's dependent on orders from the government. But there are companies in wagons where significant portion also comes from private sector. And what happens is that once the direct freight corridor is ready, then I do expect a lot of freight to move to railways from roads, and that is where I think the growth will come in. So it will not only be government orders, it will also be private sector orders, especially in wagons, which will drive the sector, especially the segment where, as far as wagons are concerned. As far as Vande Bharat is concerned, again, there is a large opportunity. But I think there, the issue will be that the first Vande Bharat from the private sector will roll only in 26. So one will have to wait for that time. But wagons is something where I think the growth will continue over the coming 2-3 years as well and beyond that.